In this video, we're going to be analyzing C3.AI, ticker AI. If you want your own stock analyzed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, we're currently sitting around $35. What you can see is we're down 13% on the day. Massive gap down from yesterday. Again, we have just had earnings. Again, wasn't taken all that great. But what are the key things to be paying attention to? And again, we did analyze this earlier this week and last week. And the reason for that is the levels we were at, we were looking at it short bias. Again, you can go back and watch those if you don't believe us. We gave you exact levels we were paying attention to and what happened on these levels. Reversal. And again, what you're going to be thinking is, okay, a catalyst happens. Again, that happens all the time. That's why we play defined risk if we're playing at these highs, because if it was, for example, if there was really good earnings and we did skyrocket, you want to have that defined risk. But the probability is you are more likely to pull back on that news. Even if earnings were still relatively good, you are likely to pull back on that news because of the elevated price, because of where it is trading. So again, that's a thing to always note. Yes, you're going to always require a bit of luck, but that's always trading if you're or if a catalyst came in your favor. But again, it's what are the probabilities? If you're trading at these highs, earnings come out either good or you know, relatively even or bad, it's going to trade in our direction. The only way it's going to go against us is if the earnings are really good. But again, that's why we defend our position, and what we do is we have that defined risk. So wanted to note that. Again, you can go back, see where the levels we were talking about, what we talked about this high. And again, we did give a level here in case you wanted to start averaging in that bit earlier. But again, we covered these levels before. Now we're talking about where we are now, what are key levels. So what you can see is where we pulled back to around $32.75. This is our first deviation on the 6-month chart. And again, our second deviation over on the 1-year chart. So basically 2 key levels in this area. And that's why you can see as soon as we come down to this level, and we can even put extended chart on, you can see basically as soon as we pulled down, we can kind of move quite hard on earnings to this level. We kind of stabilize around this level. We come back, retest it as a resistance. It holds. We start to pull back. And then again, coming to today, we test it multiple times. If we keep failing on this level. And then again, what you can see is now there's a bit of strength. We come into the open, we kind of retest it, we hesitate a tiny bit, break above, come back to test this area as a support. Now we're bouncing. So again, good kind of bullish indicator, at least in the intraday, kind of showing us that on the earnings, there was most likely an overreaction. So wanted to know that out first. And then where do we go from here? So $33 roughly where we are now. If we continue up, the key resistances we have is going to be $38 to $39. Again, this is our second deviation on the 6-month and our third deviation on the 1-year. Now again, from these levels, this is when we are considered overbought. So again, if you're looking straight at short bias, at this level or above is what I'm paying attention to. But again, considering we've recently kind of hit through these levels, pulled back on earnings, what I would be doing is being a lot more patient on this second move if we do continue up, because if we continue up further, we have the $45 and $44 resistance. Again, third deviation on the 6-month, and we have that fourth deviation on the 1-year. So again, key resistances there. Considering we've hit all those, yes, we could trade them, but I would trade them with smaller size the first time we come into these. And again, if I bought the earnings lows, again, I'd be using these as targets on the way up. Now, where I would personally start trading it again, and again, I'll put this out here now, because if we do break to these highs, I will trade them, and that's going to be $51. And the reason for that is, again, we are extremely overbought on the 6-month and extremely overbought at the 1-year if we come into around that value. Again, $50, big psychological level, you're going to struggle here anyway. But considering we would be extremely overbought on both the 6-month and the 1-year, if I can trade this short bias with defined risk, to me, that would make sense. So $51.50 is going to be that key area I'm paying attention to. And again, I will go through my trade plan in 1 second. First, I want to note if we do continue lower, we end up breaking today's low, push lower. What are key levels? So $27.25 and 35 cents first deviation on the 1-year. That is basically our final support. So if you're holding it short bias, again, I wouldn't look to trade any lower than that. And again, if you're trying to catch a bounce, that's kind of where I would look at. But again, I would be put off with this level. And again, we'll go through that in a sec why so. But if you were looking for a bounce, this would kind of be that lowest level, at least for the time being, I'd be paying attention to. because as soon as we break that, we got $26.50 to $22. Now this is statistical mean. This is considered fair value on the stock. If I'm a trader, really I don't want to be trading this range unless I'm trading a straddle out of here, because again, usually it's going to be waiting for that catalyst and then that will give us direction. So to me, it's a gamble if I'm trading that range. If I'm an investor, then I'm buying at this range or below, because again, I want to be buying at fair value or below it. And again, why I said I'll be put off by this $27 level to go long is because, again, right below we do have statistical mean. So unless you're maybe having a stop into that range, again, it just doesn't seem like there'll be a great risk to reward, and kind of just buying at a not great level, at least in my opinion. So not something I'd be touching. Now, if we did continue lower, we do have supports at $20, $16.50. Again, these are levels which we would consider more long bias. So if you're looking to take the stock long bias, this is more the range I'd be looking to buy at, whether that's from a trading or investment standpoint. But overall, my main focus is if this pops up, again, not paying attention to the levels we've hit recently. So I'm not really paying attention to the 39s. I'm not really paying attention to the 45s. Again, might trade them, but with small size. My main focus is if we can hit that 52-week high, $52 or $51.50, I'm looking to trade that. And again, I would go through my trade plan, so we will go through that now. So again, on these trades, they usually work out quite quickly, and if they don't, we can use the money elsewhere. Now, it has become a hard to borrow stock. It wasn't before. So again, depending on your broker, so even on Thinkorswim, you're probably going to struggle to short this, or at least you're going to be paying fees. But again, this just means we want to keep the trade short and sweet. So what it really means is, again, if we're coming up to $55, we need some more strikes on here. If we're coming up to $55, I'm looking to trade this short. How do I do that? What I'd be looking to do is basically come over to here, change your spread to covered stock, look at the strike we're looking to trade, that's $50, and then we basically look at the bid side of this. Now what you can see is when you click that, it would short the shares, it would buy the calls. What this will do is, if we go into analyze trade, what you can see is this will define the risk. You can't lose more than $1,600, and again, then your max reward is basically limited until the stock hits zero. Now in this case, you know, your max risk is $1,600. Most people don't want to risk that on one trade, especially if you've got smaller accounts. Are we going to be risking that? Nowhere near. That's just because the stock is trading nowhere near this value. Once the stock's trading near $50, this trade will most likely have a max risk of around $100 to $200. And again, that is how we would trade it. We would risk our $100 to $200. If it goes in our direction, then, you know, if it goes down to $35 or $30, you're going to be up probably 5 times, 10 times your risk. So that's how I look to trade it. Now, and again, just to show you this and kind of a price where we are now, so we're sitting at around $35, as you can see here. If you go to the $35 strike, you can see in this case how much are we risking. You can see actually we're risking about, if we unlock that, we're risking about $400. And again, this might just be because the stock's been quite volatile, the premiums are probably elevated. But even in a case like this, again, I wouldn't be trading this low, but if you're paying $400, $500 at the $50 highs, again, we would expect to pull back to, you know, $30 or so. So there can still be a lot of money to be made. But again, always kind of be looking at it. If you think it's expensive compared to other trades, it may not be worth it. And in a case like this, you know, $400 or $500 of risk, there probably is better opportunity elsewhere. But again, if we're pushing to those highs, we would hope to kind of see that come down. That's kind of what we're seeing on Peloton right now. Starting to become a bit more expensive to take these kind of trades, just because, again, we're kind of staying elevated at these highs. We've traded this multiple times in the past now, quite successfully. But again, we are now kind of hesitating around this $15, and you can see it is getting a bit more expensive to trade this, just because, again, we're kind of getting hesitant. We're kind of just staying in this range. So you can see right now, if we unlock this, our max risk on this would be around $110. But again, if it goes in our direction, if it goes to $14, well, actually $14, you kind of break even. But again, it's how long does it take to go? If it goes down to $12, which would kind of be our target, you're going to be up about 1.5 to 1. But again, the key thing here is, firstly, when you're entering the trade, you would lock it. You would say, okay, I'm looking at, you know, risking no more than $80 on that trade. And then again, then your obviously upside becomes a lot greater. You can see at $14 we would now actually be in the profit, not losing money. But what is also key with these is, again, this is considering day of expiration or coming into expiration if you hold this into expiration. So that means if it takes 2 weeks to do this, then obviously you lose a lot of money just down to the option losing money. So that's where the money would be lost. But if this trade or if it starts going in your direction, you know, that same week, you're going to be up a lot more than it says here. You know, if it says $14, you'll be up $20. If it's happening in, you know, a day, two, maybe in a week after you've entered that trade, you know, you'll probably be up, say, $100 on that trade. So this is considering day of expiration. It doesn't account for if it happens sooner. So again, your call would lose nowhere near as much value. And the thing I like, or the way I like to trade these as well, is if the call has lost a lot of its value coming nearer into where we would close out the shares, what we can do is cover our shares, and then if the call isn't worth much, we can hold the call. So if the stock does end up getting a temporary bounce or an overall bounce, the call can profit back up as well. And again, then it can turn still a defined risk trade. We can lock in our shares, make all our money there, and then again we can hold that call. Either we can close the call and just call that trade the end, but again, if we think there could be a further move to the upside, again we can hold that call and maybe potentially profit on that call as well, which again we were already holding, so not really much more risk than we already had. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.